Hi, I'm Ravi Venkatraman, co-founder of the Investment Solutions Institute and host of the Solutions Scoop podcast. The Institute is an independent forum dedicated to advancing the future of the investment solutions and OCIO industry. Here at The Scoop, we examine the latest solutions, marketplace developments, and speak directly with solutions industry leaders. Our guests span the investment ecosystem, from OCIOs to asset owners, investment consultants, asset managers, and other key industry stakeholders. These conversations are an important part of the Institute's mission to improve transparency and help establish standards and best practices across the solutions industry by educating asset owners, providers, and all other industry stakeholders. Let's get to today's scoop. I'm your host, Ravi Venkatraman, and we have a terrific guest in store for you today. We have Josh White from JP Morgan Asset Management. Welcome, Josh.
Thanks for having me, Ravi. Great to see you.
Great to see you again. Josh, you and I have been working for a few years. JP Morgan has been a founding member of the Chestnut Solutions Institute. I'm so delighted that you're going to be able to share your insights with our audience today. Let me give you a little bit of Josh's background. Josh is a managing director at JP Morgan Asset Management, where he's client CIO of the institutional business. He has portfolio management responsibility for nearly $50 billion in assets, building tailored solutions for pension funds, healthcare systems, insurers, Taft-Hartley plans. Josh also presents himself as a recovering actuary, but we love our actuaries here on the show and in our business. They've got terrific backgrounds for investment management, and especially, as you will hear, in the solutions and OCIO realm. So Josh, speaking of your background, you have an interesting path. Can you take us through where you started, what got you into this business, and how you're in the seat you're in today?
Sure. So I grew up in a really small town in upstate New York, and I mean upstate New York, the type of place that had more cows than people type of place. My mother was dead set on me going to college. She even hired one of those folks who help you think about scholarships and grants, because even then the cost seemed pretty unreasonable for college. And at the time I was very ambitious. I was sure I wanted to be a doctor, so I focused at pre-med at St. Lawrence University, which is way up at the north tip of
On
New
the
York
Canadian
State.
border, yeah.
Very close. I was focused on neuroscience. Not sure what I was thinking, but like somewhere in there, I remember just doing some of the math on med school. That was 8 more years before I'd earn another dollar, and that just didn't quite pencil out to me, which was ironic in a way because I was also taking a ton of math and finance courses, because they were easy and they were a way to just boost my GPA. And I remember my math teacher, Patty Locke, telling me that, hey, you have enough credits to major in it. So I did. And I remember thinking at the time it was just something I could add to the resume, but it ended up being one of the more important decisions I ever made, because it led me to my first job out of school, which was with a small actuarial consulting firm called Harbridge in Syracuse, New York. They were about 100 people. They were a result of the spinoff from Sarbanes-Oxley, I think back in the early 2000s. And if you know the actuarial track, you earn your credentials by passing a bunch of like brutal math exams. And I remember thinking, wait, you're going to pay me to take tests and pass them? That's not a bad deal. So I did that for 6 years. And in 2012, I really wanted to try a bigger city. I had offers in DC, New York City, Boston. I ended up picking Boston because I had a number of college friends who lived there, and I knew there would also be other opportunity for me to, try and different things for me to do. And I ended up joining Towers Watson, which later became Willis Towers Watson. And that's what opened the door for me on the investment side. I was at the time working with pension sponsors and healthcare companies on setting their investment, their pension risk transfer, funding strategy. And as you're probably familiar, Ravi, at the time, Willis Towers Watson, they had a large advisory business And like other actuarial consulting firms, they were looking to convert those into OCIO mandates.
Mm-hmm. Yeah.
And, that's where my job was really to connect those big strategic decisions to, can we actually execute the investment decisions on their behalf? And that was the real bridge from being an actuary to an investor. And that led me to just speaking with JP Morgan, I think in late 2018. And I ended up joining JP Morgan on the multi-asset team in a pure investment seat, right? And that's where
Okay.
I started to get a lot more deeper on the strategy, how you actually execute and implement. And, so today, as you mentioned, I'm the client CIO for our institutional business. I do co-lead that with my partner in London, Prashant Sharma,
Mm-hmm.
our global book, right around $50 billion. And look, I'm responsible for performance across our entire book and really for pushing the organization in the right direction so that we have the right capabilities so that we can be the best stewards of capital for our clients. So we work across a number of clients, as you mentioned. At any given day, I'm focusing on portfolio management, the strategy, or perhaps even sitting with a client to help them make decisions across their portfolio. And it was interesting preparing for this conversation because it was, as I reflected, I just never really set out to be an investor necessarily. But, every decision I've taken in my career, it seems like one big allocation decision under a really different set of constraints. And,
Starting with your choice of major.
yeah, exactly. So, what was the best use of my time? Where do I place my bets? And it turns out that's my entire job today.
That's such a great background and story. And the pension business and looking for funding and the dynamics of how that changed to really, in some ways, put OCIO and outsourcing on the map. As you know, OCIO has been around for a long time, and endowments and foundations are also early adopters, but probably for different motivations, right? So you talk a little bit about that, the pensions world versus the endowment foundation world, whether it's looking for investment solutions or different outcomes.
Yeah, I think there's been a, a, a change from there being a pension plan who is obviously very much focused on the liability and,
Mm.
understanding how you manage relative to that. And then I think you have other types of investors with, different time horizons, other things that they want to incorporate in their portfolio, whether that's just more value investing or values-based investing. And, the solutions business has just continued to evolve to adapt to those different types of capabilities that you need to deliver on those things. And, a lot of what our clients are asking for are ultimately going to be the things that we're trying to build capabilities towards. And so we're always trying to be on our front foot around
Mm.
just understanding where the puck's going, understanding the types of clients that we're a good fit for. And
Mm-hmm.
that's where we're allocating a lot of our time.
And just let's actually take a half a step back and talk about the solutions business within the larger JP Morgan world. Where does that fall in the spectrum of investment capabilities or solutions you bring to your clients?
Yeah, I think the simplest way to describe our solutions business is, we're thinking end to end in a multi-asset framework. We're starting with the client's full picture. We're bringing the entire platform together across every single asset class to build one complete solution. And as it relates to just specialization, structurally, we're specialized where it matters, and that's at the client level. And the solutions business itself, that's centralized. So just think of the latest trends, the investment ideas. Those ideas flow across our entire solutions multi-asset book, from everyone from our largest institutions to all the way to the retail side. And just to be more specific on the structure, so our client advisors, so think like the relationship managers,
Mm-hmm.
they're organized around the client segments, so pension, insurance, healthcare. Because as you know, a lot of this job, and what we've already started to unpack, is it's really about marrying the client's unique, specific situation, what they need, with their investment objective, right? The insurer's balance sheet is not an endowment spending policy. The healthcare system where their portfolio is backing their credit rating, that's very different than a corporate pension plan running a guide path. And
Mm.
that's the type of specialization that we want to be deliberate. But then behind that, and this is where the solutions piece starts to fit in, are all the investment platforms themselves. So you have equities, fixed income; those are, primarily in-house strategies. On the alternative side, you have both directs and third-party capabilities, so fund to funds platforms. There's the liquidity business, and then there's the solutions business that, as I mentioned, struts across from, institutional products, retirement, and retail products. And, what's I think interesting about our business is that, we all sit within a couple floors of each other. So like the equities team, fixed income, alts, or we're across the street in some cases. But, I think that collaboration and that partnership, that doesn't need to be fabricated. It's just hard coded. It's hard coded into how we're structured. And, that type of solution is what we can bring to the end client.
Actually, we get this question sometimes, helping others navigate. In your organization, you call yourself Client CIO, but you're an investment guy and you joined the multi-asset team. Does the OCIO business sit within the investment organization or the distribution organization or its own organization? How does that work?
Yeah, a good clarification. So the OCIO business sits within the multi-asset solutions business.
Okay.
And so we have different types of institutional mandates. I think our institutional business is closer to, call it 70 plus billion. A majority of that is where we're managing the entire of a client's assets. And so that's what me and my partner oversee. And then there are other types of mandates that might be more public-private, tactical asset allocation, income-oriented, whatever those might be, that are managed by a separate portfolio management team.
Mm. So if you had a client that's maybe looking for a multi-asset sleeve, but not the entire plan, let's just say they want to outsource their alts program or their entire equity structure, but they want a lot of different managers and whatnot. Does that come to you or does that go to a different team?
Yeah, so it can start with me
Okay.
and our team, but where it actually gets managed could be with a team that sits right next to us. And so
Okay.
you were kind of pulling on the idea of a client CIO and what that means. And really what it means to the second layer of it is, when I got here, call it, 5, 6 years ago, how I allocated my time was much more on the client side. Like I would have, probably 80% client facing, 20% more internal. And a lot of my job was working with clients, figuring out their specific constraints, what they needed. And then I would bring that back to the portfolio management team and come up with the right solution. Now my kind of role is flipped, in that I work with the folks who are more externally facing within the organization. They bring back ideas from a client and I help think about building the portfolio. What's the right level of private markets, public markets? How do we think them about a liquidity plan? Like all those things that go into a solutions type mandate. And so really a bit more focused on like the actual execution and implementation aspect of the equation. And the client thing is just recognizing that, those two things being as close as those two things have to be so close these days, especially in the environment we're in, where, these assets are, ultimately can be tied to the success of the business in a lot of ways, or it can be a big thorn in the side. And so just helping clients think about both sides of the ledger and how the assets impact the balance sheet and the income statement is really where I'm spending a lot of my time.
Got it. Let's talk about the OCIO market itself. It's grown, as you know, enormously over the years. How do you think of it, or where it stands today, and what do you think broadly the industry really still needs to get right?
Yeah, you were touching on this previously, but I think the history of the OCIO business is something to just walk through briefly, because I think that's explains a lot of where I think the standards and things that, we need today. The model isn't new. It's been around since the 80s, as you mentioned. But it's really scaled after 2008. You had the dot-com bubble, the great financial crisis, corporate pension plans saw their funded ratios drop from 100 to 80% virtually overnight. And so they woke up with this like problem that they were never, and not in all cases, really set up to manage. And the OCIO came into that space to do a few things. First, it was to put governance around running a de-risking glide path, right? Systematically taking down risk as the funded ratio improved. The second thing was just taking on the task of just hiring and firing and managers. I mean, you and I both know you spent a lot of time just focusing on, do we pick this one or that manager? And so
Mm-hmm.
they picked that off the plate. And then the third was just the operational burden, like the day-to-day trading. They took a lot of that off the organization's desk. That was the original mandate of
Mm-hmm.
OCIO. And frankly, it was the right one. It was the good one.
Yeah.
But as been we've been witness to over the last 15 years, like the types of investors that are entering this space, it's not just E&Fs and pensions anymore. It's a lot of new types of investors. There's a ton of providers in the market. The anecdote I like to just mention here is that so when I joined JP Morgan about 5 years ago, there was an RFP for a small endowment. I think it was about $50 million. Guess how many responses there were?
How many?
50.
Wow.
50. Suffice
Wow.
it to say,
And probably
uh,
all kinds of different
yeah,
providers.
well, yeah, all types of provider. I wasn't on the other end of it, but suffice it to say, like I feel for the search consultant community, anyone running the RFP process, because look, this is exactly why we need to push the industry a little, because the thing that has made OCIO valuable isn't the thing that, puts it on, it's not necessarily what puts it on the leaderboard, right? It's not in a written response.
Mm-hmm.
Um, it's it's we need to think about some real standards that, are beyond benchmarks. And so here's a couple things I would call the attention to is, we do need a better way to see beyond the benchmark. I think the front end is always going to look polished. I think everyone's saying the right thing. Everyone's deck looks great. But I think what's harder to see is the stuff that's, what actually matters, like how the OCIO is setting the strategy, how they implement, how they're managing risk, and then ultimately how the clients are benefiting from, all the things that they do behind the scenes from just the investment piece, the operations, the advice. And it's hard, admittedly, but the standards can make that a bit more visible. And I know that that's just, like, look, that's something that, you and Amanda, I know have been focused on. And I give you an example, but, I bring it back to the manager selection piece, which is one of the things that I opened with. It turns out manager selection is very hard and you can do it a lot of different ways. And I think when you start to peel back the different providers and how they do those things, you'd start to see some differentiation. And I think those are the types of things that clients, if they understood what those differences were, they might make a better decision as to, well, what do we actually need? Do we want those things? And it just shines a light on just a difference. Whereas, it's not just manager selection. It's a lot more than that. And I think how the different teams work and how they think about manager selection, that's come a long ways from the days of just picking and hiring, firing managers. So that's
Mm-hmm.
one. The second piece is, I think, incentives. This is where I'd love to reframe this conversation a bit, because I think everyone in our industry has gotten very comfortable saying, yeah, we have conflicts, we disclose them. That's become the standard line, but it really does stop there, right? And I think meanwhile, that word tends to get weaponized. And
Mm-hmm.
look, I'm speaking my own book to some degree, but especially around the use of products and proprietary products.
Mm-hmm.
But there's no real definition behind it. And it's just making me think that, conflict, is that the right word? And is that exactly what we're talking about? Because I can say with hand over heart that within JP Morgan, the internal controls that we have, we're super strict about these things. And we have to look, our compliance is there to protect and disclose those conflicts. But I think the real question is not just whether or not a provider has its conflicts, it's whether or not the incentives are going to lead to an outcome that's better or worse for the client. And I kind of think about my own seat. Like my compensation is tied to my performance, right? It's tied to what I deliver for clients. So you could call that a conflict if you wanted to, but I think it's the opposite. It's actually alignment because we win the same way. So look, I'd rather asking a provider to list its conflicts. I'd rather see where the incentives, whether they line up to mine. And I think that that's actually a really good feature, not necessarily a risk.
Yeah. You make such a good point there, Josh, on the conflict versus alignment. I think the history of the conflict label starts in, somewhat the bad old days when you really didn't have compliance departments. You could argue that that was rightfully pointed out, and some people did bad things, even not even deliberately, just there wasn't oversight in some of those standards you talked about. Now you're talking 20 years ago, but I feel like we have evolved well beyond that. Everybody is fairly buttoned up and clear, and good oversight, good risk processes. So I agree with you. Those are table stakes, and the alignment issue you highlight, how we aligned with the client and optimized to produce the best outcomes is just a much better reframe, I think, going forward. And a little bit of a plug for our institute, as you've highlighted, the two dimensions we're focused on: standards. And just for the audience, I mean, there aren't even industry completely accepted, never mind legal, standards on what is an OCIO, what is discretion, how do you count AUM. So it's very hard to actually look at different providers if you're the asset owner and you're looking at the 50 responses you talked about, because everybody's going to claim they've got X million or billion. So that's one. And then the second, as you again pointed out, the evaluation of outcomes. Performance is front and center, but beyond that, what are all the various dimensions of value that you're delivering? And I think that's one of the big reasons why you guys jumped in and were early adopters and helping us answer some of these questions, sitting alongside you in the industry.
Yeah. I mean, look, to be fair, though, we know that the industry did take its first big step, and it didn't come with, I think some criticism, but also support around just the GIP standard for OCIO. I think that came into the effect at the end of last year, and I think it's tackling things like composites and fee disclosures. And I actually think it's a decent step on performance for, things like non-liability aware type mandates, like pension mandates. And look, that's, as we've discussed, I think that's the floor, and I think the stuff that you and Amanda are focused on, that's the stuff we're trying to build towards.
Yeah, absolutely. Step in the right direction, more work to be done. Let's talk a little bit about clients and capabilities. What broadly are the issues? What are you hearing from your clients right now? And what capabilities are you bringing to the table that you think make a real difference?
Yeah, well, a couple of things. First, I'll give a couple examples from a CIO conference that I recently attended. We hosted a group of healthcare CIO providers. We sat around, it was supposed to be a round table, ended up being a rectangle table, but that's beside the point. But look, I think the first big topic that came out was how challenging active management has been on the fundamental long only side. And then the second piece was, I think, around how can you manage liquidity in a portfolio, especially around the illiquid book, because those types of investors, they have a lot of uncertainty on the investment side, but they also have a lot of uncertainty on the operating side. Like, sometimes their CFO might call them up and say, hey, I need X dollars in this date. And so that question of liquidity keeps kind of coming to the surface. But let me take both of those in tandem just to give you a sense of, I think, how some of our capabilities have been built around, some of these things that we're hearing from clients. So on the first one, we're all familiar, I think, with the stats around the AI CapEx cycle. Like there's the hyperscalers, the AI labs, the compute, all the way from networking, data centers, and energy. Right? We're seeing this play out as AI moves from training to inference to future things like robotics. And there's so much money being spent and being sloshed around that it's just not necessarily flowing to the obvious winners. You have Jensen Huang who's saying from NVIDIA that he goes out of his way to not pick winners. And when they invest in one, they invest in all of them. And the result is that some of these names that people have written off for these sleepier companies SanDisk, Intel, those are suddenly up hundreds of percent, and that's been a huge headwind for fundamental long-only investors.
Mm.
I mean, the average manager right now, the drawdown is somewhere between a 1 and 2 standard deviation event when you look at a 3-year rolling period. So clients are trying to figure out, well, what do I do? Like, do I incorporate more extension strategies? Is it more systematic, some fundamental? But does that mean fundamental stock picking is dead? No, definitely not. There's definitely excellent managers, but what we're finding is that they actually just live in more esoteric corners of the market. So it's not that that's gone, the alpha's proposition is gone. It's just that it's harder to feel a EM small cap manager at the total portfolio level because there's not a really big representation of that in their benchmark. Like, so that's where we can come in. It's like we can help a client think about all the different strategies that might not be represented in their portfolio, markets that they might not have exposure to. We can package those things up. We can monitor the managers on a real-time basis. We can lever the alpha so it's bigger. We can port it on top of a beta that is actually aligned with a client's benchmark. And the reality is that not a lot of clients can do this on their own. And this is something that we can bring to them in a packaged product or on a more customized basis, because it's exactly the type of thing that we're, building our capabilities to be able to do. So that's one. I think the second one that I mentioned was around liquidity, or I guess the lack thereof it in private markets. And more clients that we take on in an OCIO context are, they have a sizable legacy private asset book, right? And the pushback or the questions is pretty consistent. Like the distributions keep getting pushed out. A lot of clients have pulled back from new forward commitments, which I actually think is a mistake. And they're sitting there asking, well, like, what do I do with this thing? And a lot of times the life of these private equity investments, as you know, it exceeds the tenure of the investment committees and actually the people who invested in them. And so, I mean, now look, just there's one source of relief. We know that the exit windows are starting to reopen, right? At the start of the year, IPO market has started to heat up, but it pivoted quickly when there was the Iranian conflict. But we're starting to see SpaceX, Anthropic, hopefully OpenAI this year. I think exits like that are going to help, but they're going to get distributions moving again. But it's the gap is still pretty big. And, I'm of the mind that you can't just sit there and wait for the IPO market to come value out of your private book. So the question is, well, what do you actually do? And I think the traditional answer has been just not much, right? Secondary market was too expensive, so you wait. We do see that starting to change. We've been real active on the secondary markets on both the buying and the selling side. And if a client has, poor vintage year diversification or they're over their targets, there's ways to kind of fix and address that going forward. And we're spending a lot of like time and energy on capabilities to help think about the underlying positions of the privates, the cash flow modeling on a pro forma basis, the risk modeling. There's also a host of different private structures that can help bridge that gap. And so, if you're dealing with even a new portfolio that's freshly cashed, or you have this big legacy existing private holdings, we think that you can take that stuff head on and be active about it versus just waiting it out. And, when I think about both those things, that, those are capabilities that I don't think, we were really thinking of, call it 5 years ago, but these are the complex problems that, clients, bring us. And I just want to make one note too, just about the solutions business just within, JP Morgan. I mean, the good news is like it's a big place here, but the OCIO and solutions business is on the radar. It's growing, which means you get resources to invest in talent, the technology and the capabilities. And so that's a big buy signal for me as I sit in my seat that, just it gives me mind of comfort that we're actually investing in the things that are going to help our clients solve their problems.
Great points, Josh. And I get these comments sometimes, asset management is an AI going to just, take over, can't do that. But you make a very compelling case on both fronts, the public-private convergence, but also fundamental analysis, and the fact that you actually know these companies that you can uncover winners that aren't the obvious, just AI companies that everybody can read about in the newspaper and, buy at astronomical valuations. So that's such I think, a value add for the client. You started getting into this, but I'm very interested in scale and technology. What does that do for
Yeah.
you, and what does that do for your clients in turn?
Yeah, I'll start with the on the management side and how it helps us manage portfolio. And let me start with just like how our process works. So there's basically four things. There's the design element, right? That's setting the risk and liquidity to inform the strategic asset allocation. Then there's the research, how we manage the assets, and then how we monitor it through our risk technology systems. And what's exciting about the idea of the scale tech and even the AI piece is that the whole value chain is becoming more scalable through technology, right? And AI is actually helping us inform our portfolio managers to think about portfolio construction and risk across the entire book, just not just one view or one position at a time. And so let me just give you a concrete example
Mm-hmm.
of that because I think it's actually quite exciting and we're already seeing this actually in real time. But let's just say our research team likes Japan because of
Mm-hmm.
the corporate governance and the activism story playing out there. I can open up our proprietary technology system called Spectrum. I can dig into this thesis. I can pull sell side research, third party providers. I can ask it to give me different scenarios, help me understand like what the payoff pattern can look like, what the real risks are. I can also say, well, what are the upcoming data points that are going to help support my thesis or uncover some of the risks so that I can understand that there could be volatility around an idea. And so from there, I can
Wow.
trade or size the trade, right? I can understand how it correlates to the rest of the views that I already hold. And then I can, if I like the idea, I can push it down across the book wherever the client guidelines will allow. And
Mm.
it's that type of just kind of idea generation to portfolio construction to getting it into the portfolio. That timeline has like collapsed. It's very short. And
Mm.
we're we're already starting to see this within our like equities and fixed income businesses that like every morning on my commute to work, I can open my phone, I can see the P&L on that position. I can see the exact metrics that I monitored because I called those out in the beginning. And then I can either decide to add, trim, exit all before I sit down at my desk at 8 o'clock in the morning, sometimes
Wow.
sooner. And so, look, that's like I said, that's already kind of happening across the equities and fixed income. And we're like in the throes of just building that out for the multi-asset business.
So that's very tangible as an allocator and as a client PM. Let's talk about AI a little bit and the application of AI, whether it's in the investment process, the back office, or, as you said already on the front end a little bit.
Yeah, it's definitely it's everywhere.
Mm.
I think it's helping portfolio managers have kind of real time back and forth with like research. You can actually pull in outside research if you want to, if it's say not in our systems.
Hmm.
And it's just allowing you to extract the data points that, really matter. Look, on the operational side, the reporting piece, that's where it's also starting to get rolled out slowly. I think one of the biggest challenges, from like a reporting perspective, and this gets to the second part of the equation, which you mentioned, is just like how is AI and scale and tech all helping our clients, is that, you know, JP Morgan, big place, a lot of, mergers of a lot of different companies over the years, so a lot of different systems, and there's always just comes down to this main question of just like, where's the data? Is it good data? And, AI is helping us just get all the data sorted into one specific spot, just as simple as that. Because once we have the right data, our systems, like we can do the math, like we can do the performance, we can do the risk
Yeah.
analytics. That stuff is, just an output of like just analytics and but you just need the data to begin with.
Yeah.
And where I'm starting to see our clients benefit from this is like a lot of different great examples of here, but we as portfolio managers often live in, basis points and asset allocation views, but our clients live in a world of risk, and risk means different things to different investors. Insurance companies, they care about, income yield and book yield and those things. And you have healthcare organizations that, think of drawdown in, days cash on hand and other metrics. And it's allowing us to get the information more quickly so that we can spend more time on converting it into their language.
Mm-hmm.
And I haven't seen the AI jump yet where, it can just do that for you. But what it's helping us do is just it's helping us get the information quicker so that we can actually massage it and put it into more client friendly language. And look, I mean, client demands are just continuing to increase because the investment landscape is more complex. Their stakeholders within their organizations range from people who need to know what the cash accounts look like day by day, all the way up to you have investment committees, boards, et cetera, who they want to have transparency into the portfolio. And, are we doing what we're doing, what we said we'd do?
Yeah. And even not that long ago, post COVID or any other big event like that, clients are always looking for real time feedback on market exposure. If there's a market event, they want to know what the exposure is, what it means to them, what scenarios might play out, and what you're describing. Now, you don't have to log into 6 different systems like we used to do not that long ago to get answers to all of that and send that off to different departments. If you, as you say, the data is pulled together and you can query very sophisticated questions like that. That's really amazing. That's a good example of where scale matters. Is there anything else, and as you're looking forward, how are you looking to deploy technology? Where do you think this is going to be able to help you if you're involved in any of that?
Yeah. So yeah, look, I sit on our business leadership and our investment leadership teams where we're, constantly talking about technology that's always on our radar. I think there's a
Mm-hmm.
couple of things that we are really focused on. One is, especially in the OCIO or solutions business, we've become a lot more open to, on the public side, taking on third party holdings and other public managers.
Okay.
And to do that right, we know that this has been the multi-manager reporting on the public side has just been, I think, a thorn in a lot of people's sides for a really long time.
Age old
And
problem. Yeah.
yeah, it's age old problem. And we're really working towards a solution where if a client wants to have some other holdings on
Mm.
their portfolio, we're happy to take them on, happy to report on those things. But we also want to figure out how can we have the same conviction in our risk management systems for, the strategies that, don't live within our ecosystem, have a security level look through so that we can provide the same type of risk analytics on that piece of the portfolio too. And so there's a body of work that we're doing on the tech front just to build that type of capabilities, working with, other people across the firm. And then I think too, and I did touch on this a bit, but we want to continue to figure out how to provide the customization at scale.
Mm.
Um, I won't get all dystopian on you, but you could envision a world where, because we may want to touch on that later, but you could be in a world where it's as simple as saying, I am comfortable with this level of illiquidity. I like these types of risks. This is what my drawdown is. And it's a lot more just turning some dials and then customizing that across the client's portfolio. And yeah, we can help them think about how to turn those dials, but we're trying to figure out how to just make customization at scale a real thing versus just kind of saying it in practice.
Wow. Would you go so far as to say, I mean, that would just be like a giant separate account? So who needs all these funds? Maybe with the exception of privates?
Yeah, I mean that's exactly the type of conversation that we're kind
Wow.
of thinking through because look, you can tackle the scale problem in different ways. You can, some firms will have their own funds that, might have a different public equity managers in there that they like. That provides scale in a lot of
Mm.
ways because you just invest clients across those things. Or you can have, you know, every account is, separately managed, but you figure out a way to, when you have an idea or you have a manager, you can scale that across the portfolio and just do the trading in a big scalable way. And we're
Yeah.
trying to, we're a little bit more in that camp just because of the nature of how we're set up, because it just allows you to maintain, I think, some of the flexibility, especially like on the customization piece. Like, if the client doesn't like EM, or they don't like a certain type of like private manager, like they don't like venture, you can add those types of features so that, when you make those trades, you make those decisions, they kind of systematically get removed from the equation. And it just makes idea, to my earlier point, idea to portfolio construction to putting in the portfolio, you can just do that
Hmm.
in a big scalable way.
That's such a great example of directly of how scale can have a bearing on building a better client solution. Kind of continuing in the same vein, as you look towards the future, would love for you to get out your crystal ball and talk about, what are you guys thinking about? Where do you think this is growing and going? And technology aside, just other industry issues that are sort of top of mind for you.
Yeah, look, I'll leave some of the real futuristic ones to some other folks, because I know that there's a lot of good ideas out there. And I think the one tangible thing that we keep coming back to is, and we started to unpack this a bit, but just around the convergence of public and private markets. Like private
Hmm.
markets, they're democratizing.
Hmm.
Um, the plumbing is all starting to change underneath. You see evergreen structures being released. How do you think about those in the context of your portfolio? I think that's a question that we're going to continue to unpack and figure out if it's the right structure. Because at the same time, you also just have a deepening secondary market. And
Hmm.
I think what excites me about it, not necessarily the technology, but the blockchain technology. I think
Hmm.
it's going to start unlocking that customization that I mentioned, and it's going to allow clients to have access to a lot more things. And look, I think there is a trade-off though over the next, call it 5 to 10 years, that we need to consider. I think a lot of this private market return premium that you used to get paid for locking up capital, that's going to start to come down, and you're going to actually have to redefine what an alternative, like what's a true private investment. And we don't think that's going to disappear. It's just going to, I think, migrate to where the true illiquidity actually is and where the complexity lives. And, I think that's where, we'll be focusing a lot of our energy as that market starts to evolve, because, and this is more, I think, so that's the investment side, but I think on the people side, I think this is where I actually get pretty optimistic about our role versus, thinking it's going to go away, because as the democratization continues to increase, it's the access that's not going to be the hard part anymore, right?
Hmm.
It's really the judgment that becomes the hard part.
Yeah.
And, 10 years from now, like everyone will be able to buy almost anything.
Hmm.
And like really, like almost nobody will know what they should buy. And I think that's the gap where we want to live, which I think is interesting, because
That's
that's
great.
that's kind of where we all started probably 50, 60 years ago at the end of the day.
Wow.
Everything's an asset allocation decision.
All comes back to what you started with. That's such a great story. Um, Josh, one last question more with a client hat. Just to be clear, your client segments that you're working with, what is the profile and how do clients come to you and get in touch with you?
Yeah, look, I think we do a really good job in areas where these assets support both the operating business and they're seen on the balance sheet. So that's pension plans, that's insurance companies, that's healthcare. When I look 5 years ago, a lot of our book was just ERISA pension clients, but we've really started to diversify that into other areas. And like that's the area where we're most focused on. We
Mm.
have real deep expertise across those areas, because look, insurance companies, they're dealing with tax, accounting, capital, regulatory requirements, like all those things it's a highly constrained asset allocation problem. And we think we have a lot to provide there. And you can make the same case about just healthcare with the various pools that they have. So that's where I think we're hanging our hat in the solutions OCIO space. So whether you're a client looking to kind of work with us on that base, you can obviously reach out to me or your whoever your client advisor is.
Hmm.
But if you're a fund provider whether you're a GP that has a specific type of private strategy that might be interesting. Those are held within our alternatives and fund of funds businesses. I'm happy to make connections, to the extent it makes sense.
That's terrific. Josh, such a great conversation, especially appreciate some of the newer points about how you're using technology, value add, and painting a picture of how that can differentiate your capabilities and the value and enhance client portfolios. I want to just thank you for this conversation, but also, again, for your membership in the Institute. It's clear, as a founding member of our Institute, you guys are pushing forward on all the right questions for the industry that's going to help all of us and all of the solutions in OCIO industry a better place. So thanks again, and really look forward to continuing to work with you. It's terrific.
Yeah, it's been great speaking with you, Ravi, and I just want to send a thank you back. You and Amanda have been great. It's been great to work with you over the last 3 years. I'm looking forward to the next.
Awesome. Take care. Chestnut Advisory Group is a boutique, practitioner-led management consulting firm dedicated to asset managers and investment solutions providers. In addition to the Chestnut Solutions Institute, our advisory practice areas include distribution strategy, M&A support, go-to-market, and implementation and coaching services. This podcast is owned and produced by the Chestnut Solutions Institute. If you like this content and would like to access more insights, webinars, and podcasts, please check out our website, chestnutadvisory.com.